Hi everyone, and welcome to today's webinar, Balancing the Scales of Cybersecurity and Insurance. We chose this topic for this month's webinar because we've seen an influx with our clients and them receiving requests from their insurance providers of different risks and standards that they need to meet for cybersecurity, and some of these requests have created some confusion. So we wanted to bring everyone associated with the situation from an insurance expert, a cybersecurity expert, and our team here. So bringing everyone together, and we're going to discuss how you can really balance the scales of cybersecurity and insurance in today's environment. Kicking off today then, we are going to have myself listed as the host. I'll be in the background of things. And again, my name is Nicole Murtha. I am the marketing coordinator here at PGH Networks. Our moderator today is Derek Geisler. He is our director of sales and marketing here at PGH Networks. We have our trusted Huntress partner, the cybersecurity piece of this, Matt Tomlinson. And then we have Reed Wellock. He is our guest speaker from the insurance side of Fifthwall Solutions. He is the president of Fifthwall Solutions. Looking at today's agenda, it will be 60 minutes, so we'll wrap up around noon. We are in the beginning of the introductions at this point, moving into balancing the scales from 11:10-ish until 11:45. And then the last 15 minutes is reserved for an open Q&A discussion. However, if you have any questions throughout the webinar, definitely drop them in the chat here and we can address them as they come up. And anything that hasn't been answered or you're still thinking of towards the end, we'll gladly cover. So Derek, I'd just like to hand it off to you now.
Excellent. Thank you so much, Nicole. And again, as always, for everybody that comes to these events on a monthly basis, I want to thank you for all the effort that you've put toward, making sure that you guys are covered from a security standpoint, and honestly, a lot of the other topics that we kind of review each month. This is a pretty important topic that I think is really going to hit companies of all shapes and sizes. So we wanted to really bring some big hitters to the table, and who else but Huntress to bring, right? We've had a ton of success with Huntress as a partner of ours. We've been a partner of Huntress almost since the beginning of PGH Networks. They've really kind of come up in the cybersecurity world over the course of the last maybe 10 years. But before we kind of get into that, I would like to give one more final thank you to Nicole. Nicole has put tons and tons of effort into these events every month. She is really the backbone behind making all of this work. So Nicole, thank you so much for all the effort that you put in and kind of putting this together. So I don't want to waste any more of your time with this, so I'll just kind of get started. For those of you that are first-time joiners, Derek Geisler here with PGH Networks. I'm the director of sales and marketing. If you don't know who PGH Networks is, we're an IT support company, right? We do contracted IT support for small to mid-sized businesses. We also have a number of partners that we work with, as I had mentioned. We have Huntress, who is a huge cybersecurity partner for us. And what I'm going to do is I'm going to actually hand it over to Huntress to do some introductions on their side. And then we'll hand it over to Reed over at Fifthwall so that he can kind of talk about some of the insurance industry, and we can kind of go through that and really start to break down what insurance looks like now and what it's going to look like in the future. So turning it over to you.
Cool. Thanks, Derek. So I'm Matt Tomlinson. I run sales readiness for Huntress today. I was responsible for the mid-market group for the past year and a half at Huntress. Before that, I was the chief revenue officer, ran sales and marketing for about $100 million MSP. So I've been in the MSP world for probably 15 years. Before coming to Huntress. So tons of experience with the small and mid-sized business world. Huntress as a whole, we run about 1.3 million agents in the wild. Ranges from organizations from 5 users up to thousands of users. So we see lots and lots of different things out in the market. So as Reed's going through some of this, I may be kind of throwing in some of my own color commentary on what's going on, what we're seeing from a security overview, and just kind of helping guide that from a cybersecurity standpoint. So that's me, and that's Huntress. I'm going to kick it over to Reed. Known Reed for quite a while now, so one of my favorite insurance guys out there.
Well, that's a compliment, because it's not always the truth when the insurance guys there's a favorite. But thanks Matt, thanks Derek, thanks Nicole. We're really excited to be here. And so I guess you can consider me the insurance nerd in the room. So I'm part of Fifthwall Solutions. I am the president. Been with the company for over 5 years now. And Fifthwall's main purpose is it's insurance, but it's cyber insurance. So we know a lot. We come out of a wholesaler that's local here in Pittsburgh, that's been around for almost 35 years. So a lot of experience to build off of. And we developed our expertise in the past 5 years just on cyber liability. So we work with the global market for the most part. So we work with almost every carrier that's out there. And for those that aren't familiar, what a wholesaler does, just to kind of get the lay of the land, we sit below the carriers. So we get to work with all the insurers, those that provide the insurance, and we get to interact with the process every single time. And then we work directly with agents as well. So all of you probably have a retail agent that you work with, and have had hopefully a conversation about cyber. So not only are we a conduit for good products and process, we're also consultants, because cyber insurance, as we're going to walk through this, it's not exactly simple, and it's new. So it's exciting for me because it's all that I do, and hopefully we can get some good content out.
Awesome. Thanks, Reed. Yeah, I think this is a super viable conversation that needs to happen.
Sure.
You know, this stuff is changing so aggressively right now, and I'm excited to kind of hear about what's to come and kind of break this down a little bit.
Yeah. So should I jump into it, Derek?
Absolutely. Let's just get right in.
Well, I have a deck that I'll go through, and I know Nicole mentioned this, but I'm a huge proponent of questions in real time. So if you have questions, don't hesitate to put them in the chat, even if we don't get to them right away. I want to make sure folks don't forget them. And also, since we'll have time at the end, we can always double back and get to them. But sometimes those questions can really trigger good talking points, and I want to make sure that whatever pops up in your brain, that we have an opportunity to tackle. All right, so I'm going to share my screen, which will bring up a nice disclaimer right in the beginning. So hold on one second. There we go. All right, so we're going to talk about a lot of scenarios. We're going to talk about coverages. That's all well and good. I do want to make sure everyone is aware, no matter what, make sure you're looking at the policy, those terms and conditions. You're talking to a licensed agent if you're going to look at any terms and conditions that are going to govern in the event of a loss. So we want to provide good insight today. We want to provide really good educational material. It's all material that we have gained and knowledge that we've gained over the years being in the position we're in. But at the end of the day, it's always good to have that intimate conversation, right, with your agent or with someone that is licensed when it comes to insurance in general, so not just cyber insurance. All right. So I thought, Derek, it would be good, and I want to make sure you're able to see my screen.
Yep.
Great. I thought it'd be good if we kind of went through some scenarios here, because when I do these types of presentations and I go through insurance, it's really easy for me just to jump into the insurance content, which is sometimes not the most exciting. First, I want to make sure folks are kind of familiar with the problem. So if I'm going to talk about a solution, I'm going to talk about how important cyber insurance is. I really want to make sure we address some of the nuances. And the best way I've learned is just kind of going through some scenarios, right? These can hit home, hopefully, and for some of you, but these are real life situations, and these aren't one-offs, right? So we're experiencing, there is a cyber event every couple of seconds, right? It's now happening worldwide. So it's happening consistently. And the mantra now is it's not if, it's when. So let me go through some of these, and I'm sure Derek, Matt, you guys might have some things to chime in on. So big one right now, an employee inadvertently transmitted a virus to customers and suppliers. The company was sued for failing to contain the virus. Losses totaled more than $3 million. This is really big for us because we're going to talk about liability soon. what's often overlooked is there's a concern of, well, how does something affect me? But you could also ask the question, how could you accidentally affect someone else? And what is the liability associated with that? It's a big situation for us, especially when we're seeing the different tactics change. And the claims that are coming in are not just first party anymore. It's not just someone in their company being impacted. We're seeing a lot of folks being sued because of what is viewed as their negligence now. They're failing to do X, Y, or Z, didn't have proper due diligence. So next one, an email that appeared to be from a longstanding vendor relationship directed a company to update banking information for their account. Company paid over $200K to the fraudster, no funds were recovered. So you're going to see a theme here. And the theme for us is the human element. And we're seeing it a lot. You're seeing, a lot of folks that are looking at the technology side and they're saying, all right, well, they have to get past through this, that, or the other. But at the end of the day, we're seeing a lot of just human manipulation, and we call it social engineering, a lot of modern day trickery. I don't know, Derek, if there's anything on your side that you're seeing with some consistency there.
Have seen this 5 or 6 times over the course of the last, say, 12 to 18 months. This specific email to vendor relationship requesting banking information. It's actually one of the topics when we do cyber training for all of our employees, and it's one of the topics that we bring up during the cyber training because it is so relevant and it is hard to prevent against. It can be very tricky to prevent against, right? Especially from the standpoint of maybe it's not you maybe you're not the person that got hacked, or your company is not the company that got hacked, right? It was another company, but you're still forking out the money.
Yep.
And trying to get that money back can be challenging. So we've seen that active attack happen over the course of like the last 12 to 18 months for sure.
And that's something that's really spiking. We're seeing is it's kind of, well, yes, if I'm a company that's transferring funds, I thought I was sending to the right person, right? And maybe this was a vendor, maybe this was a client, whomever it may be. So I had goodwill and good intention, but who's bearing the consequences? It's the
Correct.
person that was supposed to be receiving the funds. So saying, well, I paid, but I didn't receive.
Yep.
And now there's finger pointing, right?
So from a security standpoint, one of the things that I would recommend here is obviously multi-factor authentication is one of those like huge things that applications use. You should be doing the same thing when it comes to money transfer, updating accounts, giving information out. There should always be a multiple factor as far as authentication goes whenever it comes to this. So in this scenario, if you have banking information that needs to be updated, call the person that's requesting the update and make sure that it's actually them requesting it. So you can't be too safe, especially when it comes to money. It's way too easy to just send hundreds of thousands of dollars to somebody and never see it again. So take the extra step and make a call.
It was interesting. I actually had a client go through this, right? And somebody had requested that the banking information had changed. The hacker was smart enough that they changed the phone number on the email and actually were answering the call as if they were the actual employee on the other side of the call. So generally speaking, I agree with you. We have to make sure that we make that phone call, but use maybe cross compare that phone number to what's in your CRM or your ERP system or whatever the case may be. If you're generally doing business with a company, you're going to have like a point of contact that you're comfortable with or that you're used to working with or whatnot. Try to go around that phone number that's on the email itself. Try to find a different way to kind of get in touch with them, right? Or just make sure you cross-reference that phone number is actually the same phone number that you're used to calling. Because I have seen some really tricky stuff. They're getting smarter and smarter on how they approach this stuff.
Yeah, there's a lot you can do too from just policies and procedures around this too. We're seeing. So if you sit down with your agent, for example, part of good risk management would then say, okay, if you have insurance, how much do you have for this scenario, right? You don't want to have to use it, but you want to know it's there. And if there's a limit on it, that's also, if you're folks are saying, well, wait, so you're saying anytime I do a payable or I'm wiring funds, that's a lot. Well, pick a threshold maybe, right? So you want to make sure that you're not wasting too many resources to a degree on business operations. But I've seen a lot where they say, look, if there's a wire transfer of over 25,000, we're going to verify every time. That's our policy,
Yeah.
right? And now we're seeing insurance policies do the same as a condition. We're seeing the exact same thing of saying, look, as one of the conditions of this policy, you're saying you're going to implement this process internally. So before folks feel like they're going to be completely like, how do I control this? It is controllable, and there is a trust but verify mentality. So a hacker gained access to an email account of an employee of a small accounting firm. The hacker used the email address to compromise several of the firm's client organizations. The firm was sued to the point of bankruptcy by their affected clients. This is one that here's a picture I want to make sure I paint for everyone. And I know, Derek, Matt, you're going to agree on this. When we talk about someone's exposure, so I'm going to use insurance-y words, right? So I'm talking about your level of risk and the exposure you have. There's a lot to consider. But if you boil it down, what is of high interest on the outside world is your data, right? So your data is very valuable, but so is your access. Okay, so if you're going to look at your organization in the mirror, look at both things. Look at the data you have, how you're protecting it. Look at its value. Where is it? What are the steps of control that you have over it? But then also look at your access, how someone can move laterally throughout your organization, but then also view yourself as a target for the access you can provide to somebody else.
Yep.
We saw this huge in manufacturing, for example. We saw manufacturers in 2019 out of nowhere start to get hit like crazy. And it wasn't because folks were after that manufacturer's valuable data, right? Well, what do they have? Employee records and whatever it may be, if it's not intellectual property. But a manufacturer has a lot of tentacles into a lot of other organizations, right? And this is a classic case that we've seen.
Yeah, it's how do I get, it's all about the supply chain, right? Who are this person's clients, and how can I get higher up the food chain in order to get a larger pool of money, basically, in a general gist.
There's a way, yeah, and look at yourself too. It's have a little bit of ego. Say, yeah, people might be interested in what I have, but also they might just be interested as you as a conduit, right? They can lily pad. All right, so some more warm and fuzzy scenarios, and then we'll start getting to the meat here. Imagine a hacker gained access to the email account of a staff member with the authority to direct other staff members to communicate with a client or partner. So we're talking about those lateral moves, right? So you get into an organization, and maybe I don't need to go outside, right? Now I can start to maybe call the shots, and I'm going to manipulate from within. Technically, it's still social engineering. It's still preying in on the human element. Imagine reputational damage if your connections to other partners or customers was exploited, leading to their breach. This is one, and I'm going to cover this later when we're talking about coverages, but it's often overlooked because you're thinking about kind of the A to Z of, all right, so I get breached. How do I get through it? How do I make sure I'm made whole? Because I just need to get my business back up and running, and I need to go to business as usual. There is an afterburn, right? So this happens, and it's happening a lot, and reputation matters. And if you start to see contracts that maybe aren't renewing, or an order gets canceled, things like that, you can all of a sudden start asking the question is, am I viewed differently because I was breached? Absolutely. And do my partners view me differently? Derek, do you have anything to say on that?
Oh, I mean, absolutely. You see it, right? I mean, you lose your reputation because people view as, hey, I'm concerned about what information I'm able to provide to this client or to this company or whatnot, right? And especially from our, in our world, right, being on the MSP side or even Huntress on the cybersecurity side, things sneak through the goalie, and they're going to. It's not a matter of if they sneak through the goalie. Like, these guys are always way out ahead of it. It always seems like the hackers are out ahead and we're kind of falling behind and trying to block and tackle, right? Whether that's right or wrong is a question. But yeah, I mean, if you're not comfortable with us, we're going to lose your business. That's just the simple fact of the matter. Stepping back on the hacker gaining access to staff members and directing, maybe they're not even gaining access, right? We're seeing attacks, and these are dumb, very low level, doesn't take much, right? They're they're spoofing somebody's email that's a CEO or a president, sending an email to a new employee asking you to go get gift cards, right? And it could be something as minimal as that. I've seen it happen. I've seen people almost get caught, right? And it's just like, don't do that. Like, why would that guy ask you to spend $750 on Google Play gift cards? Like, that's realistic. Like, these are actual live hacks that take place, and they've happened over the last 5 years, and they still work to this day, right? Because I found that the lack of security understanding exists throughout the world, and it's really like you have to educate before you can do anything else, because the actual software isn't going to protect from everything. It just can't.
Yeah, and I was about to make a analogy to what people think of a hacker, and it's that guy, with a hoodie in the dark, this nefarious, very crafty. And by the way, the irony here is I'm pretty sure I have someone in a hoodie in front of a computer on my next slide. So anyway,
I was gonna say that's
infamous. Is it me?
Every company is using.
It's Matt. It's a picture of Matt. But the reality is that, yes, there are a lot of instances where I actually have a good example. Like, yeah, are you being watched? Sure. You're being watched when it matters. So there's a lot going out on social media, a lot in PRs, things like that. So here's a prime example. Fifth Wall starts growing, right? We start making new hires. This is recent, right? We made 4 or 5 new hires in January and February, which is great. All of a sudden, those 5 new hires are getting emails from the president of the company.
Yep.
Okay, because they're new, and it's asking, hey Wilson, I don't have your cell phone. Do you mind giving it to me real quick? Like, weird, right? Well, Rita just talked to you. Why do you need my cell phone? So none of them, thankfully, they're wise enough. They're looking at this going, yeah, that's not Reed. But obviously, that someone made note. Oh, Fifthwall's hiring new employees. Easy target. Boom. Right? What's special about Fifthwall? Maybe they don't even know what Fifthwall does. They just see that there was an announcement on LinkedIn of new hires. So they're always paying attention. But it doesn't take a lot to they're not looking at this from, I'm designing this very artful attack and I've created this malicious code. And no, I'm just going to see if I can trick someone. I just needed to click on a link. I just needed to open an attachment. That's all. And sometimes that's all it takes.
So keep in mind too, the maturity level of hacking organizations has increased substantially over the years. Again, people used to think of hackers in hoodies in the basement, doing these nefarious things. Conti ransomware group released something not too long ago. They actually have an HR department. They have partners in the channel that they work with. They are a business just like you, just like us. So, when we talk about ransomware groups, when we talk about threat actors, it is a serious business, and it is something that they are very, very, very focused on, let's say, doing a good job, so to say, at your expense. So
your peril.
Just be aware that is a very real thing. There's not a lot of individual hacker in a basement kind of things anymore. Everybody out in the dark web is running some kind of partnership organization, just like Reed and I working together in this presentation. Same thing in the ransomware world. So
Matt, maybe you can verify for me something. I heard that I can't remember what group it was, but they actually, after a ransomware event, provided a customer service phone call back to the victim to verify that their experience went well when getting their data back. So they paid the ransom, provided the token, all of that, and then they called back to verify that they actually had a good experience.
Not only that, most of them have help desk now that you can call whenever you're trying to restore your data. If you have problems with the restoration, they will help you with it. And most of these ransomware groups are actually now sending information on how to level up your security after a breach. So whatever just happened doesn't happen again.
Yep.
So, we have letters from ransomware groups that say, hey, you have X, Y, and Z port open. You shouldn't have that open. You have access from,
They're doing
individual
vulnerability scans.
contributor that, they shouldn't have access to financials, right? So they go through and actually give you like line by line, this is what you should do if you pay the ransom.
Yep.
So they're nice.
They view themselves as a legitimate business, right?
Yeah.
So, well,
Who doesn't like a nice hacker?
I guess.
Who doesn't like a nice hacker? They just took.
Yeah. Well, you invite them over for
$500 million
barbecue on Saturday.
They
Why
should
not?
be smiling.
Well, I want to keep this moving just for time's sake, and because we're going to cover business interruption and business disruption later on. And guess what? Here's a hacker in a black hoodie in front of a laptop, just for Matt. But this is one thing I want to make sure, and we already highlighted it, I think, pretty thoroughly. But it's just I want to make sure folks realize that hacking, we use that word, it's a general word, but in reality, there's so many different ways that you can be impacted. One of the big ways is simply through human error. And that's something that's really complicated and it's really difficult to manage. One way to manage that, we're doing it today. We're getting educated. But a lot of the claims we're seeing, so I'm going to speak from my side of the house, a lot of the claims we're seeing is because of human error. And sometimes that human error, it's a statistic, not because someone got tricked, but sometimes it's because they made the decision to not implement X, Y, or Z, right? They made the decision to not up their security posture. So for everyone on the call, it's good you're here. And we want to make sure that we don't want anyone here to become a victim because of that human error. So we're going to go through some material because we're about to get into the real insurance stuff, which is where I get excited. Matt might fall asleep. We'll see, because I know it's really exciting stuff. But and also I want to make sure if there are any questions, and this is typically where they come up around coverages, things like that, please fire them out. Make me feel like I'm needed and I'm useful here. All right. So there was an evolution that occurred. This is the context I want to make sure I provide. And I know, Derek, you have some input on this. We talked beforehand because you kind of watched this from a different angle as this unfolded. But let me give you the perspective. Again, as a wholesaler, we're sitting kind of in the middle. We're in between the agent and the carriers, and we're watching this go by. And the entire time we're facilitating the process, right? So back in 2016, I spent a ton of time working with end clients to talk to them about cyber with agents because this issue was still being understood. So I say back in the good old days, from 2015 to 2018, cyber insurance was very low cost, and there was really no barrier to entry. So if I held a mirror up to your face and you fogged that mirror, guess what? You could get cyber insurance. It was very easy to get. And for anyone that did purchase cyber insurance back then, you probably didn't really even need to have a very in-depth conversation about it. It was very affordable, but it was still not really adopted much, even though it was affordable. I think back then it was below 10%. It was about 8% till about 2018. The awareness was still low. We were still looking at something that wasn't fully understood, and a lot of folks weren't yet feeling the pain directly, but it started climbing, right? So by the time we got to 2019, we were seeing a lot of industry-driven attacks, at least on our side of the house. And actually, I'm going to throw this back over to you, Matt, too, just kind of how you saw the progression as well. But on our side, we saw claims start rising significantly. So all of a sudden, phone calls start coming in, one after another. Inevitably, it's like, okay, we went a week without one. This is a good news. This is a good feeling. But the crazy thing is awareness was still low and the defenses were still low. And this is right when ransomware was just like getting hot, right? And we saw something that didn't really matter what you did. If you're operating in the digital age and you had email, guess what? You were susceptible. What's happening on the other side of the fence right now? And this is really important context, right? I want to make sure everyone kind of hears this, because if you're trying to go through the process of getting insurance right now, you're probably going, what happened, because it's kind of insane right now. Like, I'm having to fill out 5 pages of applications, and it seems like I'm not really sure what I have to have in place to qualify. Well, carriers were not expecting what happened to a degree, and they were losing money like crazy, and still are. Okay, so it wasn't just the fact that they were, had a lot of policies out there and they didn't collect a lot of premium because the policies were cheap. It was also the fact that not a lot of data was collected. So the underwriting was really, really immature. They weren't really asking a lot of questions around, like Matt brought up MFA. Well, MFA just recently started becoming requirements for cyber insurance, but it's been around for a long time.
Yep.
We're going to talk about these solutions as we get through the presentation, but this is really where carriers all of a sudden, this is the 2 visceral reactions. The 2 visceral reactions were, wait a minute, we're losing a lot of money, so our prices need to go up, right? Our rates, the premiums need to go up, and they are still climbing like crazy. And our processes need to change. And so they're playing catch up. Keep in mind, insurance is an actuarial science, right? So it's historical. They're used to looking at the past. They're not really very used to looking not just in the present, but into the future as much. And with cyber, absolutely, you have to start doing that. So we saw this evolution really happen. And for the insurance industry, it was happening with insane speed. So Derek, we kind of talked about this, particularly on the application side. I know you said you were kind of already seeing a little trickle, and then things really started to spark.
It kind of started out, like you said, like a trickle, right? And it was not, the conversations were happening, right? And we're going, hey, have you guys thought about cyber insurance? What are you currently, what are you doing today? Talk to your insurance advisor and make sure you're at least having the conversations. Down to, at this point, we're doing 3 to 4 requests a month easily, minimally, right? And it started out where MFA, probably in the last 12 to 18 months, MFA was the requirement, right? If you got MFA on, you're good. But it has changed aggressively probably in the last 4 to 6 months, where it's like, it's not just MFA anymore. It's, we're getting into network access control. We're getting into ongoing penetration testing and management. We're getting vulnerability assessments. We're getting into, privileged access management, and like all of these different applications that, if things like EDR or managed detection and response, if you don't have these things, you're just not even getting, they're not even giving you an option to get insurance. It's just like it's a hard no, at this point. So, Matt, you can weigh in if, as far as what you've seen as well, but like those are the types of things that I'm seeing right now, as far as just the requests that we're getting.
Well, Matt, if you don't mind, because like we saw on my side, it's the response, a response to something that was happening. Like on your side of the fence, I'm sure you're actively seeing that what's happening, like the attacks increase, the complexities increase. So can you speak to that?
The funny thing is, at the end of 2018, beginning of 2019, there was a shift in the market on the threat actor side. It's actually kind of interesting, but they basically started using what's called ransomware as a service in that time frame. So there's groups like Emotet and GanCrab that started coming out that basically you pay them as a threat actor to deploy your ransomware, your credential access, whatever the case may be. And so these groups would actually take their expertise, which is initial access, and they would sell initial access to all of these other organizations to do the various nefarious things that they wanted to do. So in that 2018, kind of 2019 turn, that's what started happening, was lots and lots of ransomware as a service started popping up. So you have organizations, again, partnering with other groups, and their job is just getting initial access. And then they got a piece of every attack that happened. So that's where kind of that big spike of attacks started coming in. And the reality is that the market, the end user market, wasn't ready to handle in some cases still is not ready to handle some of those as a service offerings because they are so good at getting initial access. And then once they get initial access, they do what's called long-term persistence, and then they hold persistent access and they stay in there for long periods of time. They do discovery and things of that nature. So all the way through 2019, what you were seeing is you might have gotten hit at the beginning of the year. It might have taken 100 days before they actually started launching their attacks. So, you know, that period of time really shifted the whole kind of dynamic of the protection side of cybersecurity, right? The attacker side shifted immensely, and we had to pivot to be able to handle those organizations that were very, very targeted and focused on initial access. And so that's kind of what was happening on the security side. While you were seeing claims go up, we were seeing attacks constantly happening from, you know, just a handful of these really, really good initial access ransomware as a service vendors.
Yeah, it almost sounds like, you know, things get start to be commoditized at that point, and you actually are looking at businesses as they view themselves scaling. Right, they're scaling their businesses, and guess what? They're entering the enterprise space. I don't mean that as far as the attacks, but they themselves are becoming enterprise organizations. Well, for time's sake, I just want to keep us moving on the insurance piece. So I want to make sure I get something out there and I'm crystal clear about it, because this is something that if you're asking yourself, okay, well, this sounds compelling, sounds like I need to be looking into cyber insurance, and read when you actually going to start talking about insurance, because we are. This is the kind of the preface is, let's define it. So when I say cyber insurance, what do I mean? Because there's something I certainly don't mean. What I don't mean is that there are endorsements that are out there. So if you have other lines of coverage, and at one point in time, you may have seen the word cyber listed there, okay? You may think I have cyber coverage. You do not. You have cyber coverage if you actually had a conversation with your agent, or you made the distinct decision to purchase cyber insurance as a standalone form, right? It's not attached to anything else. It's on its own. The reason I really want to make sure there's a differential here is that with those endorsements, they have the word cyber on them, but they give folks a false sense of security because they're very low limits and they are riddled with sublimits. And what I mean by that is they will look at individual things that might need to be paid for in a cyber event, and they may say, well, you have 100,000 in coverage, but this thing right here, we're going to sublimit to 5,000. So like my favorite is they'll sublimit forensics, which is a service of investigation, discovery, and it's a very important element. Bottom cost for that is like $12,000–$15,000, and they're sublimited at $5,000. That is not a policy that's meant to protect you and make you whole. Again, it's a snack. Where if we're talking about a standalone policy, this is actually designed to pay claims. And what I mean by that, it has the parts and pieces. This is a program that's been looked at from the perspective of how is a business affected after a breach, during and after a breach. And we want to make sure there are modules of coverage in there to cover all of those. All right. So I'm going to use the word comprehensive, right? So it's a comprehensive form. So, and this is something I'm sure if you haven't already been presented by your agent, make sure that you do have the opportunity. I don't want to make an assumption that everyone's kind of gone through the motion, so to speak. Because this is something that as a business, you want to be proactive towards, and you want to have the conversation, get the facts on what you have and what you don't have, and get it from your risk advisor and your agent. Okay, so real quick, I'm gonna skip a slide and I'm gonna skip back. I'm about to go into like the nitty gritty here, and I'm gonna try not to put everyone to sleep when I go through what's on a policy, right? I'm gonna do that. But first, I want to address something that is often asked of like, okay, what is a breach? What does it look like typically? What's a policy supposed to do typically? Well, you just saw there's a lot of things on the list that I just showed. So there's a lot of things. There's a lot of different ways a business can be affected. And as a result, there's a lot of different ways a policy can respond. But one of the consistencies is in that beginning phase. you're experiencing an event or you suspect you're experiencing an event. So in our world, if a policy is triggered, meaning, all right, you paid for this thing, let's start working, right? Let's start putting into action. The first step typically is you're going to get involved with legal, okay? So carriers always like to have attorney-client privilege established in the beginning, especially if PII is involved. They also want to have someone that's familiar with the dynamics of what you're going through and any relevant laws or compliance, okay? It's always important to look at those first. And another thing is we're going to get to a really important piece, which is the data, but like we're not even getting into it in the beginning. There's this whole step first. Next is they're going to determine is forensics needed. So do we have enough to say, yes, an event occurred, there was a breach, right? Now we need to get the how, what, where, when, why, who. We need to get those answers. Well, you need to hire a service to do that. You need to have someone that's come in and specialized to perform this service and actually do that due diligence to get those facts, right? Guess what? It ain't cheap. It's a costly service. From there, it can spiderweb. Because depending on what you see there. Go ahead, Derek.
One thing to mention on the forensic side is like Reed had mentioned that not all insurance is created equal. These forensics companies, they're also not all created equal. So you have to be very sure of who you're moving forward with, because the forensics in a lot of ways can be probably the biggest key to kind of getting you back to whole, if you will, and ensuring that maybe this doesn't happen again, or there's a low percentage chance of this happening again, right? Is really understanding what happened, how people got in, what open. So you know, make sure that you're spending the right resources on the forensic side.
Yeah.
It's vital, right? You don't want somebody giving you a report that basically says, well, they got in through X, Y, and Z. And it's like, yeah, that's not possible. They couldn't have got in that way.
Yeah.
Like that's not, you know, so just got to make sure that you're picking a relevant and viable forensics company. And good.
The good partnership here, I will say. So sometimes folks look at legal and they look at attorneys and they go, all right, well, here come the billable hours. It's like, well, no, they are vital in this process, not just from the legality, but also the liability. So to Derek's point, like who you're bringing in matters, and you want to make sure the discovery process is thorough. You're going to have a good policy is going to provide that legal team to be, you know, standing right beside you at your shoulder, helping you with those decisions, right? And there's a level of credibility too that you want to make sure is following that. So let's get to the actual policy, because right now I'm saying, look, here's generally speaking, this is how typically things unfold, but there's some nuances here. What are those nuances? Well, actually, let me hit this first because this is relevant. I'm going to get to it. But when you understand more about the situation, then you better understand what you need to do next. And what you need to do next are things sometimes that you're required to do at a state level, at a federal level, based on industry compliance. Okay. So regardless of what you do, what your business does, in some way, shape, or form, if there's a breach occurs, you may be beholden to some sort of other body to say, look, if PII was exposed in the state of Pennsylvania, and if it's over, I think it's 250 records now as a threshold, and it does include PII, you have to notify, and you have to notify all the folks affected.
And what you have, like,
and guess what?
60 days to notify or something. It's like a very short window too.
You have
like
a critical
2 months.
time to do it.
Yeah.
Yep. Guess what? If that's HIPAA, if that's medical information, you might not, you might be finding HIPAA violations. If it's payment card information, now you are going to be asked whether or not you're PCI compliant. So there's a lot of things that can kind of stem from there once we do the discovery. Now, when we look at the coverages, and I want to make sure we're still good on time, so I'm going to move relatively quick here, but at the same time, please ask questions as they come up. A good form really should be at the full limit everywhere possible. What I mean by that, and sometimes the question is, well, what is an aggregate limit? Like, I'm confused because I see numbers here for 1 million and there's other numbers at the bottom. What's going on? Okay, think of an insurance policy when it has an aggregate limit. It's going to say, Derek, here's your insurance policy, and it's $1 million policy, which means when the time comes, I'm going to have a bucket, and in that bucket, it's going to be $1 million. Okay. things are going to come up and you're going to need me to pay for things. So I'm going to pull money out of the bucket. You're going to have $1 million total available. So however that slices and dices, you may need, 50,000 for legal. Great, here's 50,000. Now you have 950,000 left. Okay, well, forensics was crazy. You just spent 100K on it. Great, here's 100,000. Right now you have 850,000 left. The aggregate limit's setting that pool, if that makes sense. When you see a sublimit on a policy, they're saying, look, this particular thing, I know you have $1 million in that bucket, but we're only going to let you take out so much for this particular thing. You still got the full bucket for everything else, but like down at the bottom, we see social engineering. We talked about that. For social engineering event, you're only going to have $250,000. Okay. Not to be confused that if it's a social engineering event, the entire bucket shrinks down to 250. No. You still have that $1 million in there. It's just for that one event. So I want to make sure that's clear to everyone. And it's always good to go through this with your agent. So when we look at this, my recommendation is like, look, get as much to the full limit as humanly possible, because we never know. No one has a crystal ball to say, well, yeah, when you go through your breach event, it's going to look like this. No one can say that.
So Reed, question for you. I think probably the million dollar question is, what's
Sure.
the right coverage? How can a company determine the right coverage for themselves, right? Because
Yeah.
$1 million might not be the right coverage for every company. What's the best approach there?
Man, that is the question of the day, the hour, the minute these days. Right now, let's start with what we know is a standard practice. A standard practice right now is always start with $1 million. Okay. You may say, like I'm a Main Street cafe, right? And I have 5 employees. Why are you telling me I need $1 million? Statistics are showing it is so easy for these things to get up, even small events, into the 6 figures. It's that just, if you actually are buying a safety net, that's the recommended limit. So really the question is, when do I go above $1 million? Just to define that.
Yeah.
It's an exercise you can go through, and there's a couple of different ways you can go through it. Often I'll pick something in particular that I know is a very costly element of cyber breaches, and that's business interruption. So, and in your world, Derek, downtime.
Yeah.
So if you were sitting there with a client, a good tabletop exercise, let's go through the tabletop exercise of a ransomware event and downtime, right? You know the facts based off of backups, X, Y, or Z, but average downtime for ransomware, last I read, and Matt may correct me, but it's getting close to 13 or 14 days. I know it's shifting a lot, but going through that exercise, you can start to think through, okay, how much money would that equate to? And is $1 million enough? And that's just one element. I would typically, though, go through that exercise. You want to look at, and actually this will be a good exercise for me to go through this page. In blue, it's those crisis management services that I listed right up here. In blue, these typically on average, you want to make sure it's going to be about 100K. Like, it'll be less in some instances, but like when you look at legal and forensics and then the possibility of some of those services coming out of that, you always want to assume that's going to be about a $100,000 incident. So if you're looking again at downtime, is $900,000 enough, right? So business size often comes into play too. So if you're going through that exercise, so if you're a $2 million in revenue company versus a $50 million in revenue company, that is going to be a very different answer. So on average, we see businesses, and I'm going to go off of revenue, I guess, for this tabletop.
Yeah, for sure.
We're seeing businesses kind of, if you are between 1 and 8 million or even 1 and 10 million, typically $1 million in coverage is a good recommendation. Not to say, look, the nature of your business also has to come into play as well. When you get above that 10 million revenue mark is really when you've got to be looking at 2 million and maybe even 3. That's just what we're looking at, just from when you're looking at downtime, you're looking at the crisis management. So in this instance, yeah, size of the organization does matter. Yeah, and honestly, it's I wish it was one of those, well, A plus B equals C. Here's your formula to tell you, right? You do kind of have to do the due diligence to kind of go through the scenarios, and you could actually do it through a slide like this. You can kind of go and look at your business and say, okay, well, extortion ransomware, that's a tough one, right? Because we don't know what the ransomware would be, what they're asking for, but I know that equals downtime. I know that equals business interruption. Reputational damage. Go ahead.
And just
Go
to
ahead,
point out, and Matt actually posted in the chat, Huntress does have like a downtime calculator, which
beautiful.
I've actually shown it in one of my previous events, and Nicole is actually going to post the site. So it's kind of cool. You kind of figure out, how many users you have, how long you were down for, and then it kind of gives you the number basically.
Yep.
Kind of gives you an idea of what that could look like. Anywhere from 13 to 21 days is what I've seen as far as, average amount of downtime for companies to get kind of back to whole. It gets expensive. You got 200 employees and that adds up.
Oh my gosh.
you know?
Absolutely. And that's not even that, we're not even talking about recovery,
Yeah.
right? At that point. So like, in addition to downtime, we're talking about, and there's, I say modules of coverage, but look at these as line items, right? So at this line item for data replacement and recovery, like even though you always want to have that at the full limit, because again, it's one of those, there is an A plus B equals C, but you don't know what A and B are until you're in the event.
Yeah.
So how big of an event? How long was my downtime? Those are equations that really you're only going to be figuring out in real time. Whenever we get to some of these other coverages on, so like crime, this is something in our industry. It was like, hey, is it going to be on a cyber policy? Is it going to be on a crime policy? But these are kind of like the more notable ones, like ransomware. I feel like most folks know, like they hear the word ransomware, like I'm familiar with that. You hear social engineering. That's kind of what I was talking about with trickery, preying on the human element. Electronic theft is that wire transfer fraud. It's the intercepting funds. It's the getting into an account and changing information. I'm not preying on the human element, but these are things, they're more common. So why are they sublimited? Like, why would insured do this? Here's why. Whenever I'm talking about those items, I'm not talking about, and I want to make sure this is clear, we're not sublimiting the entire event. So if someone stole funds for you, you can get up to $250,000 back from the insurer. That's what they're saying. They're saying, look, in an event like this is a tough one because this is a very black and white direct cost, right? It's not an indirect cost, it's a direct cost. We will reimburse you up to we will write you a check for up to $250,000, right? But guess what? That whole experience of like figuring out, okay, did we get infiltrated? Was our network actually, do we have an outside actor inside of our network? I need to get forensics done. Well, I'd like a lawyer, right? Those you still have up to the full limit. So you can still call upon, all the services that are available. But just often when folks look at that, they go, oh, that's tough. And as an industry, generally speaking, you're not going to find those at the full limit. It's just kind of where the industry has landed. So
So from the standpoint of this coverage right here, right? So we're looking at this generally speaking for a company that's under 10 million bucks roughly, right? Somewhere in that ballpark. And as you had mentioned, it could change based on have the conversation with your insurance provider and make sure that you guys are doing the right things. But how difficult is it to get insurance, basically this coverage for a standard business is under 10 million bucks? Like, what are the things that we have to basically account for?
You're reading my mind and you're teeing me up for the next slide, Derek. Look at you. I don't even know if you intended to do that. All right, here it is. Getting insurance is not easy anymore. Before we dive into this, let me just kind of go back to that story I told in the beginning, because it's that cautionary tale of how things had to change very quickly. To answer Derek's question, to get coverage, even for a small business now, the industry as a whole, it's not standardized. So cyber, you could go to one carrier and they've got one practice. You could go to carrier over here and they got a different practice, right? So they're not standardized. However, generally speaking, they're all kind of figuring things out together, right? They're understanding, okay, we're not a security company, but we're looking at the data, and MFA is really important. In fact, if it's not paramount, I mean, it's so important. And guess what? For most, if not all businesses, it's required. So if you're trying, even if you're that under 10 million, they're going to want to see MFA in place. Okay. They're going to want to see backups that are segregated. So if we're filling out these applications, and mind you, these applications have also evolved over time. Okay. So I'm sure, Derek, you were sitting there a year ago going, all right, this isn't too bad. I can answer this out for my client. Now you're getting 4 different applications for one client. All the applications are different.
Totally
right?
different.
They're
Totally
totally different. And it's like, well, just pick a spot and stick with it, man. Right. But they're trying to evolve, and they're trying to evolve quickly. But consistently, they want to see backups, and they want to see those backups are segregated. And they're going to want to see that there's MFA on those segregated backups. We're seeing more on security awareness training and phishing simulation. We're seeing a lot more of that. Carriers aren't necessarily saying it's a must-have, but it is one of those, if you don't have it, you're probably going to be paying a higher premium.
Yep.
Patching and vulnerability scanning, we are now seeing carriers doing their own vulnerability scanning ahead of time and at bind.
Yeah.
So they're going to say, hey, we'll write you, but we see some outdated patching that needs done, or we see some open ports. And last but not least, but I shouldn't have grouped these together, but NGAV is kind of one of the table stakes, but EDR now has become really the new MFA almost, to the point where we're seeing insurers say, look, if you don't have it, you're going to need to have it. So they're already kind of showing their hand for what's to come on next year's renewal, right? They're really understanding the importance of the tool, and they're really understanding the importance of it as a security risk reducer, right? And I know that's something that, well, obviously for those here, it's a good talking point. But before we go into that, everyone on this call, if you're going to be applying for insurance, you need to look at this slide and understand now there is more of a table stake situation for insurers. They're now saying there is a minimal viable insurer that they'll be willing to entertain now, if that makes sense.
Yeah, and I'm even seeing more than just these things, right? Like you said, these are like the minimum table stakes, but in these policy requests, right, these forms that you have to fill out to kind of get policies, it's getting very, like, when you talk about vulnerability scanning, they're even going further, right? They want penetration testing done on an ongoing basis. And like the difference between a vulnerability assessment and a penetration test are far different, right?
Oh, sure. Absolutely.
This might cost you $1,000 to get done. This one might cost you $15,000 to get done, on an ongoing basis. And so, the insurance companies, they don't, their goal is not to pay out, right, as best as they can. So they want to put as much in place as they possibly can. I mean, Matt, are you seeing anything in addition, like when you're talking to folks, are you seeing any other kind of controls that people need to be aware of that are going to be costly?
I mean, the kind of table stakes is exactly what Reed was talking about. I mean, MFA is one of those that's absolutely necessary. EDR is becoming, I mean, we're seeing people send us insurance requirements and saying, hey, we need an EDR. Do you guys cover as an EDR? That kind of thing. So they're definitely stepping up. The thing that I am finding, though, is insurance is still trying to identify what each of those kind of like EDR, XDR, MDR, they still have pretty loose definitions of that. So, you need to make sure that that's clarified and understood whenever you're filling out your insurance applications. But I think this is a pretty good place to start. Patching is something that is paramount. I don't see it that much in insurance applications, but it ties into everything that's done. So, Reed, you may see it. I don't see that many actual applications, but it's something that is critical from a security standpoint. So,
yeah, and actually, here's how I'd phrase this. Look, insurance, they're still figuring it out, candidly. And I know I'm on the insurance team, but I don't have a dog in this fight. I can say the carriers are trying to figure this out as they go, but here's what they've identified. Consider this almost like organized gambling. They're trying to hedge their bets as best as they possibly can. And now they're going, oh, wait a minute, we're now identifying what actually really matters. So you could look at insurance right now as almost like a level of compliance. Almost like this is now another third party to validate for you as a consumer what are the areas I should be focusing on? Because if insurance is saying I should focus on it, maybe that should be telling me something, right? And so I know we're coming up here on the hour, Nicole, and I want to make sure we're respectful of everyone's time. So I could keep talking about this for another hour, but I won't.
Well, at the end of the day, I think just to throw a quick plug, from a PGH network standpoint, we use Huntress in every single client deployment that we have. Okay. And the reason is because they are that EDR, MDR, XDR kind of back end. They're watching our backs, watching the client's back at the same time. And they've been hugely beneficial to us. So if you have questions on whether or not you guys are supported from an EDR standpoint, the answer is yes. And especially now, Huntress has actually deployed a new EDR solution that we are in beta testing with. So we're really excited about that. That's going to be an awesome tool. The other thing that I would mention is if you aren't sure today about your insurance coverage, if you aren't sure, reach out to us. You can either send an email to marketing@PGH Networks. Nicole would love to basically grab that information. We'll get you connected with Reed. Reed can absolutely help you if maybe you're not happy with your insurance provider. Maybe you want a little bit deeper conversation, what have you. We have direct access to Reed. We can get Reed in touch with you and get you guys connected to have a deeper conversation. At the end of the day, we want to supply customers with the best experience that you can possibly have. And working with companies like Huntress and Fifthwall Solutions is going to be the way to be successful. So reach out to us. With that being said, we're past the hour. I don't see any questions in the chat right now. So I'm going to go ahead and just thank everybody for joining today. So everyone is aware, we are recording this, and we will be posting the recording up on social media, as well as we will be have this on our YouTube channel at PGH Networks. Nicole will follow this up with a kind of a follow-up email with the recording and all that fun stuff. Reed and Matt, I want to thank you for your time. It was incredibly valuable, as this is a huge topic right now, and it seems like it's going to be a huge topic for the next years to come, probably next 5 to 7 years minimally, it seems like, right? And then again, once and for all, I want to thank Nicole for all your efforts in kind of putting this together. Guys, also understand that we do this on a monthly basis. We have different topics, right? Some topics are IT driven, some topics are not. Nicole, what's our next topic that we're going to be reviewing next month?
So our next webinar is going to be Thursday, May 26th at 2 p.m. And it is why IT compliance strengthens and protects your business. So
Right.
One of the pieces that Reed had mentioned is essentially that insurance is becoming almost like a compliance. So we were going to be diving into the compliance aspect next month.
And we have Schneider Downs, I believe,
Yes.
a full accounting firm here in Pittsburgh, is going to be working with us to talk about some of the compliance and kind of getting through all that. And so that's going to be exciting. So please make sure that you join for that as well. Reed and Matt, again, thank you so much for joining, and really appreciate it. And everyone have a good rest of your day.
Thanks, everyone.
Thanks,
Take care.
everybody.
All right, we'll see you.